Are you thinking about investing, but you ended up being confused about choosing one or the other? Allow us to enlighten you and make you understand the basics and the cons and pros of cash flow and capital gains. Hey go-getters, welcome back to The Early Investors, another profitable episode where you can learn how to become financially free. In today's episode, we'll be showing you cash flow versus capital gains for beginners. Want to become the next Warren Buffett? Stay with me to find out all the tips and tricks to save your hard-earned money. Before we jump into the video, make sure to subscribe to our channel for more business-related content. Cash flow. It's quite a lot to spend in cash flow when you have an asset. For example, let's use a rental property, and you have money coming in from it each month. It's an asset you've invested in, and you're hoping to make consistent, predictable money out of it. Every day, every month, every year, every quarter, whatever the asset brings in and whatever the period of time. The aim of investing in cash flow is to accumulate wealth over time gradually. Basically, and preferably, what you want to do is reinvest the money thrown off by this asset to purchase more assets. You can keep constructing more of these in that way. Let's assume it's a rental house, and so now you have two instead of one cash flow streams, and then you can invest these two back into buying more, and so on. Over time, that's how you create huge wealth. Obviously, if you want to look at some examples, we've been talking about owning property that generates profits. You can do this with a single-family home, and real estate, it's possible to buy real commercial real estate. Another example would be dividend stocks, so there are many good dividend stock channels out there. Similar concept, let's say we're investing in 3M. So if you guys are familiar with 3M, their ticker symbol is basically 3MS. They're the ones that make consumer good paper product stuff, like they've paid an outstanding dividend. They're a dividend aristocrat for the last 25, 30, 40 years. You have one share of 3M, for instance. This throws a certain dividend away. A month, let's call it $1. You can take these dollars and reinvest them and buy 3M more shares, and this amount increases over time, and the shares increase over time, and it just keeps getting worse. That's just a different example. A promissory note is another example of generating cash flow, so you can actually become a bank. Say, for instance, you've got a buddy who knows how to flip houses and he's looking for a short-term loan. So he says, "Hey, I'm going to buy 30 grand for this house. I know that I will make X dollars on it. Let's say I'm going to sell it for 100. You know what? But I really need you to know that to get started, I need 15 grand. So what you can do is you can actually become a bank. You loan the flipper this $15,000 that you would be able to give you a down payment on, and then you will actually produce a monthly stream of interest income. I don't know, assume you're offering them a loan, 8% because you can't find it anywhere else, and then boom, you just created a monthly income stream for yourself. But that's cash flow investing. Cash flow investment will probably be best for individuals trying to become financially independent. So let's call this financially independent or individuals investing for their retirement. Typically, let's talk about economic independence first, why these two things are good, because financial independence is essentially when your revenue is higher than your expenses. If you have 10 cash flowing houses that are all paying off, let's go back to that real estate example. Every one of them brings in $1,000 a month, and profit once again paid off. Keep that in mind. If you have a cash balance of $10,000 and your spending is $9,000 a month, congratulations, you're financially independent. If you don't want to do it, you never have to work again. Retirement is pretty much for individuals that hold dividend stocks that can potentially hold real estate, whether they're in a self-directed Roth IRA or if they're in a self-directed 401k. You can invest them in that situation almost anything you want. The reason dividend stocks and cash flow are interesting for retirement or appealing for retirement. However, it is simply that these individuals know they need a certain amount of money to come in. Via these funds, they get that because that's pretty much what cash flow will be about. Capital gains. Investing capital gains is pretty much the old cliche of low buy sells big. So this is pretty much buying something to sell it for 2 for $1, buying it X cheaper, selling it higher at Y. It's your usual low sell, high cliche purchase. The purpose of this is to buy something at the time that is considered either undervalued or considered to be undervalued, and then obviously to sell it at a later date for a higher price. Your capital gain is the difference, because if you buy anything for $100 and sell it for $200, your capital gain is just the amount you sold for less than the price you purchased it for. That will be $100 in this situation. So, capital gains are pretty much to give you a few examples that you can know to flip a car, to buy a car, saying you can find an undervalued car that you can buy for $6,000, sells for $10,000, which is a $4,000 capital gain. Another instance is buying low, sell high stock. So you buy the 3M stock at, let's call it $150 a share. Next thing you know, they come out with the innovative product. This goes up to $170, boom. Your capital gain is $20 times the sum of outstanding shares you will own. The same thing with the house flipping, so on and so on. So, who is the most suitable investment for capital gains? This is for individuals with a nose for a bargain, like, how to search on Craigslist, how to find an undervalued stock, how to find a mom and pop truck that's going for far less than it's worth on the other side of the road. Basically, individuals who will find underperforming or undervalued properties have to have a nose for the bargain. Or you have to know how to force the appreciation and value, whether you're a real estate investor or whether you're a fixed and flipper of anything. You'll find an apartment complex, for example. There were 100 units in the apartment buildings. Each of these units earned $600 a month. You know, though, that this is an up-and-coming neighborhood. You're upgrading all the kitchens, all the toilets, converting the stinky carpet into hardwood, and having 850 rentals a month. You have now generated $250 times 100 units of value per month, which will boost the apartment building's net operating income, enabling you to sell the asset for even more money than you bought it for. That's what we call appreciation forcing. Some of the pros of capital gains are that you can make big profits and a little bit of time, depending on the type of asset. One of the cons of capital gains investing is that it can lead to speculation and loss of money if you're wrong. In the stock market, especially with traders, this occurs quite frequently. Trading can be very lucrative. You might lose a lot of money as well. All claim they are geniuses. They know exactly what's going to happen with the 3M stock, but in our example from before, this actually goes from 150 to 130 instead of being at 150 a share to 170. And guess what? You just lost dollars a shared time, however many shares you have outstanding. Make sense? So this could result in a loss of revenue. If you have capital gains or cash flow, and if you're young, they're both correct. It just depends on how you want this to be handled. When you're young, you have time on your side, so whichever way you want to invest, you can stick with that and invest more cash in that plan. So, whatever you choose to do, choose to be definitive, decisive, and choose early. So that's it, folks. I hope this video was informative. Make sure to leave a comment below. If you have any doubts, ask away in the comment section. That's a wrap to this video, hoping that these tips will help you in your journey towards success. Don't forget to smash that thumbs up button if you've liked it. Good luck with your new endeavor. Until next time, folks.